Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing we want to do is open up our brokerage platform. The one I'm using is tastytrade, but you can use whatever it is that you like. And we want to open up just any underlying. We've got GLD here, and we want to come over to the trade tab and just pull up a list of expirations. And now we can see, we can choose what expiration we want to look at. For the purpose of this video, we want to be between 30 and 60 days out in time, and we also want to be on a monthly expiration and not a weekly or quarterly. So the only expiration that fits that criteria is December 20th right now, which is 53 days out in time. So we can take that information, come over to our watch list, and then simply filter out any underlying that has earnings over the next 53 days. The reason for this is because we don't want earnings to come along and disturb our trade. It will increase volatility, it will mess up our deltas, and that's exactly what we don't want to happen because it will have a negative effect on our P&L. So we want to filter out anything that has earnings, and we also want to filter out anything with a low liquidity rating level. We only want to trade liquid underlyings. We want to be able to get in and out of positions easily, and we only want to be paying tight spreads. So at this point, you want to then list everything from high to low IVR. And we want to be looking at things with an IV rank of 50 or more. In some situations, 30 or more can be okay, but generally speaking, 50 or more is ideal. And that's basically it. Now we are ready to go down the list and see what we want to take a look at and see if we can mock up some positions. Before we do that, you do need to keep in mind that whatever you have in your portfolio already needs to complement your new positions. So if you're heavy in any one sector, you don't want to then be looking at more underlyings or more trades in that same sector. You want to keep your portfolio light and diverse so that any one move in the market can't cause catastrophic losses or a less than ideal situation in your portfolio, let's say. So we go down the list. Use your common sense and be aware of what you already have in your portfolio. TLT has a lovely IV rank of 87.3 right now. This could be a good trade. We have had a look at TLT a couple of times before in the past, so we'll just keep moving. But by all means, TLT right now looks nice. EEM looks nice. GLD, we've already got position on. GDXJ, GDX, all looking really nice. The one that did stick out to me was WFC Wells Fargo with an IV rank of 56.8 and an absolute IV level of 32.4. It's trading at $65.61 right now, and I have a feeling that we'll be able to get a nice juicy premium out of this just by looking at the numbers here that we've just highlighted. So if you go over to our trade tab, and we know we're going to be at the December 20th expiration. And now we can open that up and we're presented with the options chain. So the horizontal orange bar here shows you where price currently is with respect to with respect to the strikes on this expiration, and the vertical orange bar shows you what the expected move is of WFC over the next 53 days. So we want to sell one call and one put, and we want to sell the contracts just outside of the expected move. And as a guidepost, I like to be between 15 and 20 deltas. So if we look here on the call side, we've got an 18 delta here, and on the put side, we've got a 13 and then a 20 delta. I would be tempted to go with the 20 delta on this position. So we've got contracts at 60 and 72.5. And overall, this is going to lead to a 56% probability of profit, which is slightly lower than normal. However, we've got a almost 90% chance of hitting 50% of max profit over the course of the next 53 days at some point. Our broker is going to require $750 in buying power to open this position, and we'll collect $1.51 per share. There's 100 shares per contract, so we'd collect $151 up front. Now, if this position was too big for your portfolio, you can just simply buy another contract a little bit further out on both sides. Just keep the width the same, so $2.50 on that side, $2.50 on that side. So now we've essentially created a range, and we've limited our loss essentially, and now our buying power requirement has been massively reduced, and we now have a higher return on capital trade. We do collect less premium up front, but the return on capital would be higher, and we also have a slightly lower probability of success on this position, whether we hold to expiration or get out at 50%. So that's how you can, that's the trade-off with covering your shorts. Um, and that's how you can find and manipulate positions to fit inside your portfolio. You do also need to keep in mind the size of your positions. So we've put together a position sizing template that's free for everybody to use. The way it works is you enter in the size of your portfolio, and then below that you enter in what the current VIX level is. Everything below will then be automatically calculated for you, and all you need to do at this point is just use the information to form the backbone of your portfolio, and over the long term you will do just fine. If you want to get a copy of this, link in the description, and then click on free position sizing template. It will take you to where you need to go. If you want to learn in more detail and see what positions we're placing in our portfolios, how we're managing risk, etc., again, link in description. Click on EDS Premium, get yourself signed up, and inside you'll have access to our portfolio, so you can see the positions that we're placing, the how we're managing risk, any adjustments, etc., all in real time. There's also a full course as well, so no prior knowledge is required. We will teach you everything you need to know. It is a private community, so if you still get stuck at any point, you can speak with myself directly or with other like-minded individuals. There's a 100% money back guarantee. So once you've studied our full course and followed our positions and trades for at least 6 months, if at that point you haven't seen results, or aren't profitable, then we will work with you for free until you do, or you can simply request a full refund. So it's completely risk-free on your part. Right now, it is £1 a month to join. The price will be increasing. However, once you're in, you don't need to worry about price increases. And with that being said, I will see you guys on the inside.